Good morning. Welcome back to our weekly professional insights brought to you by the National Referral Network. And this is where we talk to licensed professionals about real issues to help you see how a coordinated financial team can optimize your financial plan. And this morning we're joined by Romy. Romy is a mortgage professional, 34 years under his belt. And the cool thing I was teasing him about before he got online here was that he was the 2022 nationwide top dollar jumbo originator, as reported by Scotsman Guide. So we're going to talk about the mortgage process with high net worth individuals and business owners. But before we get started, make sure to hit that subscribe button, notification bell, and all of Ramy's information is below. So, Ramy, good morning, man. How are you?
Morning. Thank you so much for having me on. I appreciate it.
No, it's gonna be fun. I mean, I think one of the funny things that when we were just talking about a minute ago is when you and I first spoke, I was like, do people with large home loans actually get loans? And the answer was yes. So I was like, this is a great topic.
Right.
So real quick, give us a quick overview of the type of clients that you typically work with.
Sure. So we work with obviously all types of clients. We work from the ultra high net worth individual and the not so high net worth individual. But most of our clients are fairly wealthy and high net worth, and that's kind of what we built our business around is people who need larger loans and more complicated loans. So that's the majority of our clientele.
So in that process, what sets apart the high net worth service providers from just a normal mortgage provider?
Absolutely. So what really sets it apart is one is knowledge and experience.
Okay.
You have to have uh, done these loans before because they are more complicated. You have to know where to go. You have to know how to process them. But to be honest with you, part of it is also like confidence that you can do it. Like if you talk to a billionaire, you treat him like everybody else. That really it's a mindset of this is just another loan. Oh my God, this is like the biggest loan I'm doing. It's just another loan, and you have to just be confident and know that you can handle it, and you treat them the same as everybody else. That comes off, you know, across when you're dealing with a client. They know that if you're confident that you can handle it, that they're going to want to work with you. If you're not so confident, I think that kind of sours them on working with you.
I think that's across the board with, a lot of financial professionals, right? CPAs or attorneys, whatever the case is that you elevate your game to meet that level of client that you're working with.
Absolutely.
But in the mortgage profession, is that how do you tailor the lending solutions to meet these needs of these individuals? Because I'm assuming these aren't like first-time home buyers.
No, they're not. And they're more sophisticated buyers, and they've been around the block most of the time. So you have to really provide them something that they can't get somewhere else. You have to provide a solution for them where and they get it fairly quickly. You either have to provide them with the best rate or provide them with a solution that meets their needs, whether it's they don't show enough income. You have to come up with a solution that solves that problem. They don't have enough cash to put for the down payment or the reserve. So you have to solve that problem, whether you come up with a loan that requires less down payment, or there's a cross collateralization issue, or it might be a unique product, or it may be something like, hey, I have an irrevocable trust that most lenders will not take title on. So there's a lot of innuendos when you deal with high net worth individuals, or you have to bring in other resources like family members that can co-sign. So you have to put the puzzle together, and you have to do it fairly quickly. You got to listen to them. You have to look at the whole picture, and then you give them a solution fairly quickly. You don't have a lot of time to say, oh, give me 2 weeks and I'll figure it out. You have to know.
So Ramy, the interesting thing is interest rates. And people talk about interest rates all the time, but really it's the cost of money. So your rate isn't necessarily different than somebody else's next door. There's variations to that.
Yes.
But is it still the same mindset with these kind of clients that they're really doing rate sheets and looking for the best rate when really there's not much variation in rates?
Actually they are. And again, like I said, they're very sophisticated. They do their homework, more than others, I would say. But there is variation, and there is lenders who will, there could be as much as 1% or more
Oh,
variation
wow.
from one
Okay.
lender to another, and you just have to know where to go. And some of that is how you structure the loan. So, for example, some lenders will discount rates considerably if you're able to move, some assets to them. Even it's
Gotcha.
usually temporarily until you close the loan, but there can be quite a variance in rate, and that's kind of our job, is to constantly go out and shop. I say shop, but research who the best lenders are, and we're constantly talking to lenders, private banks, credit unions, Wall Street money.
Hmm.
I'd say 50% of our time spent on sourcing, new lenders.
So what are some of the unique challenges that these individuals, whether they're self-employed or high net worth and they own multiple companies, what are some of the challenges that they face in seeking mortgages like this?
Sure. Their challenges are the same as everybody else, but it's just magnified in the sense of, they obviously need a certain amount of income to qualify. And, a lot of them have very good CPAs and tax advisors that try to minimize their tax burden. So their income might not, their tax returns might not show their true income. So our job is to kind of unravel that picture and show the lender, no, this guy really has more income than shows on the tax returns. Um, Other challenges are down payment. The higher the loan amount, the more down payment you need. So that we have to um, work with. Sometimes it's timing. Sometimes they need to close a loan in 2 weeks. Sometimes it's a matter of the property might be half done. There are a lot of challenges. It's similar to any other loan, but it's just more magnified because of the size, I would say.
So you made an interesting kind of comment there, Ryan, about the CPAs.
Hmm.
There's this, which is interesting because you've got this dichotomy between minimizing the taxes,
Hmm.
but then it's a hindrance when you
Yes,
go to get a loan. And this could be a car loan, student loans,
that's
it could
right.
be anything.
That's right.
And so how do you help educate CPAs or business owners on finding that balance of appropriate income to tax planning? And I know you're not a CPA, but as a mortgage professional, I mean, how
Yeah.
do you have that conversation?
We don't really. And what happens is the client comes to us after they file their tax return, and
Gotcha.
the CPAs know and the clients know that if they try to, minimize their tax obligation, that they're going to have a harder time. But there's usually a loan out there for them. They may have to pay a higher rate, but there's usually a way to get them a loan. And in their mind, less tax obligation is worth more than paying a higher interest rate on their home loan.
But
So,
how do you manage the fluctuation in income though? I mean, is that, I mean, I know it's not necessarily
well,
your job as a CPA because you're not a CPA, but it's still a problem for you. You're trying to solve
it is
this
a
word
problem.
problem,
And
and it's
again, like I said, they've already filed their tax return when they
okay.
come to us. And the guy finds a house. It's not like we can go back in time and say, hey, 2 years ago and a year ago, you needed to have filed it. But this is what it is. They come to us and we look at it, and we give them our opinion of what the best solution is. Very rarely there is no good solution, but there
Mm.
usually is. I'd say 98% of the time we come up with a solution, and they usually take it. So
Right? And so
yeah,
when somebody of this caliber, business owner, self-employed, high net worth individual, when
yeah,
they go search for a mortgage provider,
yeah,
what should they be looking for? What should they be asking for?
sure. Um, well, I think. Nowadays, with the internet and so much information out there, people are a lot more savvy than they used to be 30 years ago when I started. And I will answer your question. So there's a lot more information. So what people generally do is they obviously ask around their
Mhm.
friends or CPA, hey, who should I talk to? And they'll talk to probably two or three people. They'll probably usually start with their own bank. And if their own bank can't assist them, they usually look a little, they expand their um, sphere of where should I look. And what happens is they'll talk to a few people and they go with the best option. And they usually can determine, I'm assuming by conversation with a loan officer like me, they'll look at what's the rate, how much do I have to put down, how long does it take, does this guy really know what he's talking about? That's usually how it works. So how to go about it? Obviously, there's multiple ways. They can walk into their local branch and see if they'll give them a loan and what the rate is. They can call a mortgage broker like us, but usually they ask their friends or a trusted advisor, such as yourself. Hey, who do you know? Who's done a good job? Who can I trust to really take care of me and not, you know. Uh, leave me
Out to dry. All right.
you know, you know 3
But
weeks
here,
into the mortgage process.
so here's the challenge, though, Romy, and this whole internet thing is obviously there's an abundance of information on the internet.
Yeah.
On this, the same side of that, or the other side of that coin, is that with that information becomes challenging in the sense that a lot of people come to the table and they think that they know what they're talking about, and
That's right.
just because they looked at the internet.
That's right.
And so how do you align
Yeah.
that knowledge
Right.
with the product and service that you're trying to provide them at the best possible rate?
Right. So when someone will go look at the internet, they usually look at, what do they look for? They look for what's most advantageous to them. They're like, oh, I saw a rate on the internet that's 3%, obviously, where let's say rates are at 6%, right? They
Yep.
come to you and say, hey, you know, I saw a rate on the internet at 3%. Can you match it? So once I get to understand their profile, their income, down payment, it's up to me to educate them why that 3% really doesn't exist. So for
Gotcha.
example, Mr. X, you didn't show any income the past 2 years and you only want to put 5% down. This rate is for individuals who qualify, with their tax returns and have 50% down. So that's up to us to educate them. And usually it works, but if it doesn't, what happens is they'll go and apply for that 3% loan and they come back a couple of weeks later saying, you know what, you were right. And that's kind of what happens. And I'm sure the same with your business, Yeah, you tell people, I wouldn't do that if I were you, and then they come back.
And they're just like, I shouldn't have done that.
They shouldn't have done that, and that's how it is, So it's a matter of building a relationship with them and being really honest with them. I think that's the key to any business, just being very
Right.
straight with everybody and try to educate them, and hopefully they listen.
Right. And so, Rami, look, I appreciate your time. I want to be cognizant of it.
Sure, thank you so much.
Last question here. Any tips that you could provide for prospective home buyers in this niche that they need to be aware of?
Yeah. The most important thing is that they start early. If you want to purchase a house, you should contact a mortgage professional as early as possible in the process. Have yourself pre-qualified. What that does is it gives you an idea of what you can afford, how much money you need to save, have, in the bank for this purchase, what your payments are. It'll also allow them to maybe run your credit, make sure your credit is okay. And if not, there are ways to remedy that, possibly talk to a credit repair person. And then this way you have time to prepare. It's always much better to prepare yourself over a long period of time versus just showing up at an open house and then going, okay, now I want to buy a house. It's a lot more pressure. Usually people end up with a worser rate, again, because of credit or down payment issues. So be prepared. Talk to a mortgage professional early and plan for it. That I think that's probably the best advice I can give it.
So don't go look for $1 million home when you can only afford 700,000.
Yeah, well, exactly. So you know, right, and then you're not wasting your time. You're not going out and looking
Right.
for either way too high or way too low. It goes both ways. So this way, you know where your comfort zone is as far as monthly payments, and that you're going to qualify with ease, and that's what you shoot for.
Wonderful. Romy, thank you so much for the time. I really appreciate it. Romy's information is below. Hit that subscribe button, notification bell. We are here every Tuesday morning with professionals like Romy. Thank you very much, and
Thank you.
really appreciate the time.